Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
Welcome to Stockwatch with me, Zinati Kuma, and joining me to unpack your stock-related questions today are Mark du Toit from Oyster Investments and Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. Lots of interesting company news that we got today. I actually want to start off with Naspers, the big one, because so for me, I had these dates confused with the Naspers stock split because everybody was going on about the 6th of October. So I was waiting for something to happen on the 6th. But of course, it happened today. But I guess it's a thing of those shares will only be transferred to investors on the 6th. But it actually kicked in today. Mark, I want to start off with you. At this point, net, this is a neutral move, right?
Yes. So basically, you as a shareholder, if you had 100 shares in Naspers, let's hope you did, then you'll have more shares, but the price of the share adjusted accordingly. So the actual value that you held stayed the same. And sometimes the investment platforms that you use, or the news services that you use, they don't adjust for the stock split or share splits immediately. And that's why, people get a heart attack because they see the share price is down 77%, but it's not, in fact, because the share count has changed.
I was actually talking to a colleague, and I was saying, for the first time, a person like me can actually, with my financial standpoint, I can finally look at buying Naspers. Grant and the colleague was actually saying, maybe it would be a good time to buy because the CEO plans to double the market cap at some point in the future. I'm wondering if, as a retail investor that's sitting and that's looking at the share price, do the fundamentals of Naspers say, you know what, the stock is cheaper, so get in right now?
No, the fundamentals they haven't changed at all. So the company's fundamentals are completely unchanged. There's just more shares available to buy. And look, you were right. Quite a while ago, you couldn't buy less than 100 shares. Then it was you couldn't buy less than one complete share. And even for Naspers, that was a massive number.
Yes.
So people still couldn't afford it. Now you can buy fractional shares. So as an investor, a retail investor, you can buy 500 Rand worth of Naspers if you want. So don't be put off by the price of a share anymore. And if you can't do it at your current brokerage, you move to one of those you can, where it's easy equities or whatever it may be. But what I will also say is when you have stock splits, traditionally, well, certainly the ones that I've seen, most of the time, they actually do generate, for whatever reason, it's a mental thing. People sort of see a lower price and attracted to buy more, even though the actual fundamental value hasn't changed. So you might well find this turns out to be a good opportunity, but it's not because of any fundamentals. It's just market dynamics.
And what's interesting to me is that, you have Naspers and Process, and the share of Naspers was more expensive than Process. But now they're sort of in line. And also the next question then, Mark, is if you are going to go into this stable at this point, is it Naspers or Process? Is there one that is more attractive than the other based on the share landscape at this point?
I think that at the moment the discount is actually fairly narrow compared to what it has been in history. There is a difference because the unknown piece is what kind of tax liability sits within Naspers for the shares that it still owns in Tencent. So it should trade at a bit of a discount, and then also there's always an unknown as to what happens with the cash between the Naspers shareholder and the underlying assets. But yeah, I think at this point in time, it's actually not a very big difference between the two, and it all depends on kind of your valuation of the tax liability sitting within Naspers.
Grant, would you have a preference between these two?
No, I don't think there's, as Mark said, there is a discount between the two, but it's for good reason. You may as well buy one or the other. I prefer Process because there's no fundamental reason for that.
Okay.
It's just,
Yeah.
I think investors can feel comfortable with either. You ultimately own the same thing
Wow, all
in
right.
terms of value, direction of your value.
Okay. Well, while we are on the tech topic, there's a question on stock picks for AI powering companies. Could you please guide us towards which top companies would be benefiting from powering AI? Powering AI, I'm trying to think if that is just the AI or energy. I don't know. Let's maybe take it from an energy perspective, Grant. Mark.
Yeah, so I think what the viewer is probably asking is, maybe they don't want to buy one of these high-flying AI companies. They want to
Okay.
rather buy something that's going to benefit from the capex investment cycle. So, whether you buying, maybe you want to buy NVIDIA because they supply the chips, or you want to buy ASML because they build the machines that make the chips. But I think an interesting way to play the theme is also to invest in copper. So we know that these machines are going to need a vast amount of electricity. They're already pushing up prices of electricity in America, which is causing quite a lot of news flow around it, which is interesting. And in order to build out these networks, you're going to need to use a lot more copper in the build-out phase. So I think that we've already seen the copper price starting to go up, and there's also a secondary reason for that because there was a big mudslide in Indonesia, which damaged a big copper mine there. So the supply has been limited a little bit. And I think that in the copper space, our preferred pick would be Glencore for now. Has good exposure to copper price and also a large exposure to the coal price, which is at a low level now, but could be at the bottom. You don't know what the commodity price is, but I think Glencore is a good way to play the copper price now.
All right. Grant, from what angle would you be approaching the AI theme?
Yeah, so I think the copper is a valid point. I certainly wouldn't disagree with that. I think energy, just to cover the other base itself, so there's absolutely no AI without energy. So, cooling is a massive thing. So the liquid cooling systems, also even some of the utilities they're literally building power stations right next to the new data centers. They're co-locating. So there's certainly some opportunity there, but that's not an undiscovered opportunity. So it's certainly it's pricing in a lot. And what my suggestion would be is if you're not sure, buy an ETF. So I know, for example, I think it's Viva is one of those. It's Vertiv, not Viva. Is one of those really exciting young energy companies. Everyone's excited about it. But if you buy that one stock, it does come with some risk. We are getting quite excitable in this AI cycle. So, I'm almost hesitant to say buy something like that. And then, of course, on the actual picks and shovels outside of the copper, I think NVIDIA still looks attractive to me at only 26 times next year's earnings or something like that, or slightly cheaper even. Not overly expensive. Probably the cheapest it's been in a few years, actually. And then TSMC, I think, is still very attractive. There are no AI chips without TSMC. They're the only one capable of running the 2-nanometer node at the moment still. And of course, the machines, Mark mentioned ASML, they're the only ones currently who can provide the cutting-edge EV technology needed for TSMC's chips. So there's a number of ways to play it. And if you're not sure, look for some of the thematic ETFs that play. If you're worried about picking the stock, play the thematic ETF that will buy an NVIDIA and a Broadcom and whatever else, Arista Networks or whatever the case may be. And it'll just take the stress out of getting one stock right for you out of it.
Yeah. I mean, I'm quite surprised with NVIDIA because, we just see that stock still going higher and higher and higher. I think earlier on this week, we saw it hitting the $4.5 trillion market cap. Mark, is this a case of it's a winner, so, it doesn't matter if you get on it at the high end? Yeah, how would you be approaching NVIDIA at this point?
Yeah, I think, look, it does always matter what you pay for an investment. It's great to buy an investment when it's not pricing in a lot of blue sky, and then maybe the investment case starts to come alive, and then the share price goes up. That's when you really make fantastic returns. Buying Nvidia at this stage, you're buying into the story already. I mean, you all know the share price has gone up a lot. But like Ron said, I mean, the next year's earnings look pretty robust. There's a lot of investment still taking place into AI. The demand is just almost insatiable at this point, and they're benefiting from it. And it seems like, you know, when I first started reading about this story, I always thought that surely someone can just copy these NVIDIA chips, and it seems like they actually have a software advantage, and it's not easy to copy. Their product, and so they've got an advantage. And at the moment, there's just or there's nothing on the horizon that says to you that it's over. So I think you can still buy it, but you are nearer the top than the bottom.
Okay. Well, talking about tops and bottoms, let's actually go into gold. This one also just keeps on going higher and higher and higher. Actually, just Grant, before we get to the break, just the overall theme of gold. Is the environment still supportive? Are the fundamentals still supportive of this price? Because it just seems to be eking out more juice and more juice every day.
Look, this is not a fundamentals-driven gold price in the first place. So it's really all the factors that got gold here are still in play.
Yeah.
But it's hard to know where the right price is. So it's people trying to own a hard currency outside of the dollar. So you know that China's a big buyer. Other central banks globally are buying gold because not everyone wants to be stuck with the dollar anymore, and the euro's got some limited attraction, and there's not a lot of other options. You've obviously got geopolitics still playing out. You've got inflation fears. You've got all these things leading people to buy gold. And then, of course, gold goes up because it's going up. So I feel like at this point, there's certainly a bit of momentum. There's a bit of chasing. I don't think it's been under-owned through this rally because no one believed it was going to get here. And now it's starting to feel like there's a real bit of a chase is on, and it feels a bit of a blow-off top here. Probably goes to 4,000, but if I would be looking at least moving close to the door at these levels. I wouldn't be buying here, and it can still go higher, but you're definitely taking a bit of risk. It's a volatile asset, although it has been almost a straight line up. I would wait for a better entry level if you're not in. If you are in, take a little bit of profit off the table and hold on for the ride. Just be aware that it doesn't last forever.
Okay.
But I still think the fundamentals that got us here are intact. When I say fundamentals, so the factors that got it here are intact. But that doesn't mean this is the price it's going to stay at.
All right. We're now going into specific gold counters. Grant, starting off with Harmony Gold. You are a little bit nervous at this point of buying. The question goes, do you think Harmony has the potential to reach its May 2025 highs of 360 and go to 400 Rand in the next month, given all the uncertainty and gold price forecasted to go to $4,000?
Look, 1 month is a very short timeline. What I will say is that at current gold prices, the shares I think are still undervalued. But of course, that's a big if. If gold stayed here, I don't think anyone's modeling a $3,900 gold price in their DCFs for the gold shares. Everyone assumes it goes lower, and used to be 2,500, then 3,000 reluctantly. Now, at best, maybe 3,300, 400, 500 tops. So if the longer gold stays here, the more likely, even if it just goes sideways, these shares probably can kick on further as well. But I would say just trade it. Do not go in large size, and do not sort of buy and hold at these levels. There's no question it's done a lot. Technically, I think it can retest those highs, but you just need to understand these are volatile stocks, and the timing is it's quite late in the day to be piling in. So I think it's a good trading opportunity, but I would be reluctant to suggest more than that.
Okay. I mean, what about Pan-African? Because it's been one of the winners, especially with the hedging finally gone. The question goes, can I please get an outlook on Pan-African Resources, whether there's still an upside trend as its peers are continuously rallying on gold prices, but it is struggling to break the 21 Rand mark. Must I sell or hold? But I mean, as much as it's struggling to break through the 21 Rand mark, it has been going up and up and up. So, Mark, your take?
Yeah, I mean, it's also done extremely well as the other gold counters have done. I think that, I mean, Pan bought into a project in Australia, and it seems like it's actually turned out really well for them. It was well timed in hindsight. They've also bought the Mintails operation, which is surface retreatment in South Africa, and that's starting to ramp up. So they've got a bit of a growing production profile, and with mining companies, it's always nice to have a growing production profile because it helps you with your inflation on your cost base. So I think, yeah, if the gold price stays where it is now, I think the Pan share price will continue to go up. Just like you say, it's very difficult to know if this is the gold price top or if it's still going to keep going. And I mean, like Ron said earlier, nothing has changed yet to make you think that it's the top. So it could keep going for a while still.
Yeah. Well, as you're talking about Pan-African having exposure to Australia, I mean, we know quite a few mining companies there as well. Even Benguela last year got into Australia. So the question goes, can you please advise me on Australian gold mining opportunity? That's Catalyst Metals. I don't know if you know this one, but the viewer says that Australian gold mining opportunity has been recommended to them. Would the panel even consider investing in Australian shares? Grant.
I think there's nothing wrong with investing in Australia. It's a well-regulated environment. The stock exchange is run well, and you don't have like ugly surprises like we've seen in Mali, where the government's taking over mines, etc. They've got a mining culture. So, in principle, absolutely no reason not to invest in there. I can't comment on the company itself. I don't know it. And I feel I would be honest. If you don't know the company, just be careful. Either do some homework or just sort of manage the size very carefully. We've got great gold stocks right here that you can invest into as well. So unless you have genuine insight, that's a terrible word. Unless you have genuine insight and useful information, be careful of trading outside your comfort zone.
From what I've seen, the commodity companies do well in Australia, but not the retailers. Mark, your take on investing in Australia?
Yeah, nothing much to add. It is a well-regulated jurisdiction, and I think that we will actually, with these higher commodity prices, we are going to see some new entities coming to market. I'm always a bit wary of the smaller mining companies. I mean, mining is a capital-intensive business. It's got long cycles, and big balance sheets help. So there's a reason why the large mining stocks trade at a premium to smaller companies.
Yeah. Actually, quite interesting that you're talking about them being very capital intensive. Just now we got Orion Minerals saying that they want more money. Right, let's get into construction. WBHO, Wilson Bailey Homes, has lost some significant share price this past year. However, when you look at their last financial year in results, their operational profit is up by 13% and their order book is also increased year on year. Why then is the share price on a decline? Or is it now maybe a chance to buy? I actually looked at that. I was also wondering, because looking at the results, you did see decent growth, but the share price not responding to that. Grant?
Yeah, you're not wrong. It was a decent set of numbers, and I think the order book grew as well. This has been SA construction's been a very difficult space. These guys have been, I think, the best by far, certainly from an investor's point of view. I think if you think the government's going to start rolling out some of this promised infrastructure, and also obviously operate in Australia and some of these other regions, it is looking cheap. I don't think it's. I think you can definitely consider it at these levels. And if you are going to play in construction, it's a difficult space, but it does appear to be one of the best of the bunch. So I would definitely say have a look at it.
Yeah, difficult space, and obviously we have the slow investment rollout in South Africa. But quite interesting that the viewer is asking if this is now maybe an opportunity to buy. I think it was last week or 2 weeks ago, someone actually picked Avenge as their stock pick. So I don't know if this investors are seeing that, maybe it's the construction sector has reached the bottom, and actually this is now the time to buy if you want to make big gains. What would be your thoughts there, Mark?
Yeah, I think that, we have seen a lot of consolidation in the construction space over the last 10 years. We've seen a couple of companies no longer listed. So the companies that are left will do better. I think that, there was a little bit of excitement last year for South African focused stocks. Some of the share prices ran quite nicely. And then, of course, we had the start of this year with the tariff noise, and everything's been kind of held back a bit, and companies have delayed plans. But with lower interest rates and now we've got higher PGM prices as well, which is great for the South African fiscus. This is good for South African economy. So you would think that construction can actually pick up, and that the companies that are around to do the work will actually be able to make a decent profit. So yeah, I think it could actually be a good entry point.
Okay. Well, a commodity metal that we never talk about is silver. Actually, it's also been jumping to record highs in tandem with gold. The viewer goes, if I want to invest in silver, which company listed on the JSE, or should I get an ETF? Isn't silver usually just one of the commodities that our miners mine, Grant?
Yeah, I don't think there's any pure play silver miner that you can. But I would suggest just focus on SLV, which is a silver ETF. If you have access to it in your brokerage account, then it's a simple play. You're just playing directly silver. I can't suggest any company where silver is a big enough proportion of its revenue. Maybe Mark knows maybe one of the small caps, but none that I know of other than directly into the metal.
None that you know of, Mark. But would this be one? Would this be on your radar at any point?
Yeah, I think that, people looking to invest in silver are looking for a bit of a catch-up trade to the gold, which has run so hard. And there's a correlation between silver and gold. But silver is more of an industrial metal. It's not a pure reserve metal like gold is. So there are a few other supply and demand, or demand factors that influence it. So it's not people think that there should be like a direct correlation between silver and gold, and it doesn't always work out that way.
All right, interesting. Well, gents, let's get to your stock picks for today. Grant, where are you finding value?
So I'm of the opinion that the things are going to start improving in SA. I think the terms of trade, the interest rate cuts, with these commodity prices, is going to feed through a little bit into the economy, and I think at the margin things are going to be better. At the same time, people have made a lot of money on commodities, and they're going to start taking some money off the table. And where's the money going to go? They need to look somewhere in SA into some of the value that's out there. I like Standard Bank. I think they're well placed in Africa. So as activity picks up in Africa with commodities, their investment banking franchise is going to do well. Then in SA, so they're growing well in Africa. They're cheap. They are operating well. There's a good operational momentum in the business. They're trading on, I think, 8 times earnings. Dividend yield's close to 7%. And, it's a good, solid management team. I know they lost Kenny Fiesler, but I think they've got such depth in management, they'll be fine there. And I like it. I think at some point foreigners are also going to start looking at SA. They're all looking at emerging markets and markets outside of the US. So there's a good risk-reward opportunity there, in my view. That's my pick of the day.
All right. Where are you seeing opportunity today, Mark?
Yeah, so in a similar vein, also looking at the South African Inc. stocks, I'm picking Sanlam tonight. It's down 3% for the year, so you're not buying it at the top, I would say. They've gone through a very aggressive, acquisitive strategy over the last few years. They've done a lot of deals, and now they're going to look to bed down the deals. They've got the JV with Allianz for the rest of Africa, also looking at expanding to the rest of Africa. And they're going to present their capital markets day in 2 weeks' time. And typically, when a company comes to market to present their strategy going forward, it's normally a nice story, a good story. And I think that, there'll be a renewed interest in Sanlam. I think that we've got their operational earnings growing at about 11 or 12% a year, and then paying a 6% dividend. So that's a decent 17, 18% return a year.
All right. Well, thank you so much for your time and for your analysis today, James. I really appreciate your time. That is all for tonight's Stock Watch. Thanks to our guests, Mark du Toit from Oyster Investments and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.